Hello, everybody. I'll just give it a minute or so, give everybody an opportunity to jump into the live stream. If you are watching and you can see it all, please let me know in the comment section. Drop a little message, especially if you're on YouTube and Facebook. And welcome to the Gold Market Mastery. So we're going to be talking a little bit about gold, obviously, today. We're going to break down the charts, going to talk about some of the fundamentals surrounding the gold chart at the moment. And it's actually a really good time to be looking at the price of gold. So, you know, it's come back into some key range highs, which we've been talking about on the channel for a while now. So if you do follow us on Blueberry Markets, please do make sure that you subscribe to our YouTube channel and subscribe to our other social media pages, give us a follow and whatnot. And yeah, we've been talking about gold for a while, coming up into this key range high. So it's going to be a good one to talk about from a technical perspective today. We will kind of discuss a little bit of the fundamentals, but obviously as well, I want to make sure that it's interactive for you guys. So if you do have any questions for me, please drop me a comment. I can see some people are in the chat already. Thank you for joining me, guys. Let me know where you're all from as well. That would be great. Right, so we're going to get into sort of the fundamentals. Romania, wow, super. Thank you for joining me today. Nigeria, Turkey, wow. That's pretty cool. Morning, Royston. Good to see you. Norway. Wow, all over the place. That's brilliant. Right, so let's start to jump into a little bit about the fundamentals on gold. Abdullah from India, thank you for joining me today. Cool. Like I said, if you have any questions for me, please fire away. Want to know about the gold to silver ratio? That's a good one to talk about. Let me add that to my notes towards the end, because that is I might have to talk about that on a other webinar, because I haven't got the gold to ratio chart up for this one. So if you want to join me again at 12 p.m, I can get the gold to silver chart up, because that is a good thing to talk about. George in Papua New Guinea, that's cool. Right then, so yeah, like I said, any questions, fire them away. I'll make notes of them and then hopefully come back to them at the end, and then we'll go over some of the fundamentals. If you want to shout out some stuff as well, why you think the price of gold has been performing the way it's performed, shout out in the chat below. But really, the price of gold has been sort of trading within this overall range. We've been within this range for some time now, this one just through here. And we've been talking about this for quite a while, especially when we were sort of rejecting the highs the last time we were here. Price started to kind of trade to the downside. Now, there was lots of fundamentals going into this, mainly due to sort of the reaction from the Federal Reserve starting to talk about hiking those interest rates. We saw obviously the dollar index exploded at the time, and that caused the price of gold to fall. We're now kind of on the opposite side of those things. Despite the Federal Reserve continuing to hike those interest rates, the price of gold has continued to rally, because the price of the dollar as well has essentially fallen. So that's helped boost the price of gold. We've obviously had other fundamentals involved with that. You know, we've had obviously the conflict between Russia and Ukraine as well has been a big part of it. We've had the banking crisis, which has been a big driver as well, with regards to sort of the banking crisis, not just across the US, but in Europe as well. That's been a big part of why the price of gold has rallied. But we're coming into a real key area now. So what I want to do is just kind of break down the chart from a technical perspective. We'll go over sort of the key levels that you should be looking at on the price of gold. And then we'll dive into a little bit deeper of potential sort of fundamental drivers that could either see gold continue to push to the upside, or whether we are going to start seeing that rejection. So like I said, guys, please like the stream if you can. Yeah, let's crack on. So I'm going to break the chart down from a technical perspective first, and then, like I said, we'll go through. So I'm going to start off with looking at these key range highs here. Now, this is why I said it's quite important where price is at the moment, because you can see that we've broken above this 2075 area. Let me just put it in here so you can actually see this a little bit better. So I'm just going to pop in a few details in here. So around about the $2,075 handle, I'm going to put in a big arrow so that you can all see that on the stream as well. Okay, so you've got this massive high here. Okay, now that high formed back in August 2020. It was retested again after the Russian advances in Ukraine. We had that explosive move that took price back into the highs on gold, and then obviously ever since then we've had that, like I said, that Federal Reserve potential hiking of rates, or the hiking of rates, or talking of hiking of rates. At that point, it wasn't even actually announced until sort of the second week or second month in here, before price started to push back down to the lows. But you can clearly see that 2075 handle is definitely one to watch. We're going to have a little look at the range lows as well. The range lows kind of span over a little bit, because we were looking at down into this sort of 1680 handle originally, but you can see that price broke through that area there before trading to the upside. But it is definitely an area of importance. You can see that price has turned around at these points, and we always have to ask ourselves the question, why is price turning around at that point? Who has the liquidity to push price from those type of lows? Okay, and it's big institutions, it's large money players. Okay, so we have to always take note of when price turns quite rapidly from an area of price, who are the people behind that? And most times it is going to be those institutions. Okay, so we're going to put in 1680 as a key area as well. The next key area I'm going to put in is down through here. Okay, so I'm just going to span that a little bit across the range there, just because I know there's some contact here. If we were to go down into the weekly time frame, for instance, and zoom out, you can see that we've got some highs and lows in and around that point. So I'm going to just kind of span this across this range here, and we're going to go for around about 1630 handle down through here, and then we're going to mark up some key areas, because I like the potential for gold to come a little bit lower, just from a personal point of view, in the short term. But like I said, we've got these fundamental factors at the moment, and we will go take a look at the dollar index as well, so we can get that kind of perspective of how the dollar has an effect on the price of gold. And yeah, some more comments coming through. Yeah, gold silver ratio, I will talk about that at some point. Bruce from Johannesburg, thank you for joining me. Cheers, Chris. Let's have a little look. Right, so let's just zoom in a little bit. Let's see what's going on within this overall range here. You can see that we've come up into the highs of the range, and that we've rejected that 2075 handle, and we're starting to pull back a little bit. Now, this was the area of interest from a while ago. Okay, now this was where we had the Russian invasion of Ukraine, price spiked up into these highs. We've then started to trade within this kind of bearish channel. And then we came down through that 1680, consolidated around 1630, traded through that trend line resistance. And ever since, we've been trading to the upside. Now, for a while, I was watching this area just through here because I was expecting price to turn around at this point, especially because fundamentally at that point, there was no real conditions to suggest that the price of gold wasn't going to continue lower. And then we had the banking crisis situation happen and the price of gold exploded. So what we're going to be looking at is this level in here. It's around about the 1800 area as well. Really like this zone of support. And this is also a good way of how you can build your own charts out as well. You can see that I'm just looking at key areas of support and resistance. It's probably something, if you're not a new trader, it's probably something you're used to already. Let me know if you are a beginner trader actually in the chat. That would be really nice to know. I'd like to know if you're just starting out or whether you've been trading for a while. Let me know your experience of trading, because it can also sort of help me know where you're sort of at when I'm talking about this kind of stuff. We're also going to add in a trend line through here because you can see clearly that we have these lows and that low's connected quite well. So I'm just going to use a trend line just to try and just map that area out through there. We've got these highs in here as well, which are going to be of some importance. So we're going to come into the 1950 handle. Again, if you watch our YouTube channel, you'll see that we've talked about these kind of points in the past as well. So if you are subbed over there, welcome to the stream today. Okay, so from a higher time frame perspective, Vincent, welcome. Yeah, Vincent, live streams are going to become a regular thing. We've got 2 more coming up today on the same topic. And then tomorrow we're going to be taking a look at the NFP, which again will have a big effect on the price of gold. Trading for about 30 months. Nice, Bruce. Anybody else can share their trading experience? Right, so what I'm going to do is, everyone knows as well, when we're working with these levels, you don't want to look at them as just a single point. Okay, so I've put in those handles of the 2075. They're like the whole numbers. Okay, you can see I've rounded them. You know, we've got the $1,800 level, the $1,950 level. You can see that I've rounded them to the whole number. But we always should look at these levels as supporting zones. Okay, you shouldn't look at them as just it has to hit the 2075, for instance, for you to be interested in that market. It's just a point of interest. Okay, so what I like to do is I like to mark out the sort of point of interest. So the point of interest for me here was that 2075 because it's the very high of the range. But you can see I'm just going to open that up with looking at the sort of zone in there, because price doesn't always just tap into that point and reverse. You can see now that I've included the zone, we've included this spike high on the 6th of March in 2022 as well. Again, down through that 1630 zone as well, if I was just to mark out the zone through here. That's a good question. Why not just short from the extreme? And that's something you can definitely do. If that's your trading plan and you want to just short from the extreme, then absolutely. What I would say is, if you're going to short from an extreme, are you looking for a long-term move or a short-term move? Because there is a definite difference between shorting from an extreme from a technical perspective or understanding the fundamentals that drive that market. Because if you don't understand the fundamentals, so let's say you were short here on this 2075 handle, right? Because it's come up into that extreme. Yeah, you'd be doing well at the moment. But what if the risk sentiment in the market wasn't suggesting that the move in gold was sort of done, right? I would say that there's probably more of a chance that, especially if the dollar starts to break lower, and we'll go talk about the dollar index in a second, if the dollar doesn't start to break down, then the price of gold is probably going to break through this 2075 handle. Okay, there's a lot of concern in the markets at the moment. There's like an underlying sort of risk factor. We've got potential recessions coming up. We saw the Federal Reserve actually talk about the fact that they don't think that the upcoming recession is going to be as bad as what they think, but they still think there's going to be a recession. Okay, there's other factors obviously involved with that. Obviously, the US dollar tends to get stronger in that type of period, so that could bring gold prices lower. But the gold price at the moment is, I think, just rallying on that sort of potential for that risk sentiment to drive through. We've got inflation out of control. Okay, the inflation rate really out of control at the moment, and we saw the RBA actually pause rates for a moment, and then the following meeting increase again. Now the Federal Reserve have been sort of the opposite of that. They have been increasing those rates, but now we're at 5.25%. They've also talked about pausing rates in the next meeting, and a lot of that is to do with because they think inflation is still too high, and they don't think that the interest rates that they've increased by the moment is going to bring them down to that 2% target that they want to be at with inflation. Although in the US, inflation has come down to 5%. So it's a really interesting sort of dynamic at the moment with this inflation. But there is this sort of kind of old saying that as inflation increases, gold is the hedge to that inflation play. Okay, so inflation has played a big part in why prices of gold have also increased quite dramatically in the market. Now, I quite like the sort of short-term play from here in at this 2075 handle because of where the dollar index is. So I'm just going to jump over to the US dollar index here. And this is one that I actually spoke about in a YouTube video yesterday. So after the stream, if you want to check that video out, it's before the Federal Reserve hiked interest rates. So what I was talking about was this 101 level. Okay, let me just zoom in a little bit so you can see that a little bit better. This 101 level has been a crucial level in the dollar index for some time now. We rejected down in the early part of the year. We rejected this 101. Price rallied up to the 105.75 handle. Since then, we've rejected, come all the way back down, and you can see the buyers stepping back in at this 101 level. Okay, so you can see we've had one sort of test, price rallied, not really a strong move away from the 101. We've come back down again, price rallied. We're now back in a similar sort of place. Now, this is why I say gold from those highs is probably more of a short-term move than a long-term move, because if we take a look at how price has reacted the past two times it's been at this 101 level, it hasn't really given us any kind of strong bullish move. Okay, now that's not to say that it won't, okay, because obviously we don't know what the future is going to be. Something could happen tomorrow where the dollar spikes higher, we don't know. Okay, but from this kind of point of view, I'm looking at it going, well, fundamentals in the dollar aren't particularly great at the moment. They want to see those dollar sort of prices come lower. We're back at this 101 point. The last two times we were here, not a great reaction. So I'm expecting maybe price to stay within this sort of midterm range here that's being developed down at the 101. We've kind of got the highs around about the 102. You can see I've got some long-term trend lines through there, as well as this sort of bearish channel. But the 102 seems to be the sort of point where sellers are starting to jump back in on a very, very short-term move. So really speaking, this 101, 102 range could be a potential for gold to start pulling back as well. If, however, price breaks through this 101, the dollar could really suffer, and the dollar could move all the way down into the 99 handle. If I just go to the weekly time frame, you can see here the 99 handle with these previous highs all the way back in March of 2022. Okay, so looking at that area there is the sort of next point of interest if we were to get through this area. Now, sometimes from a technical perspective, when price comes into an area of resistance, let's say you've got a range and price is trading within that sort of range, when price comes down to a certain point and will start to kind of test that sort of lower end, or even on the opposite side, the higher end, but like consolidate around that area, there has been, I would say, a 70 sort of percent chance that price could potentially break in that particular direction. That's what I've got here at the moment. I think price is obviously trading between the 102, 101. We've got that little bit of range bound movement. We're now consolidating at the lower end of the range. So that makes me feel that this 101 level could be a little bit vulnerable to a potential breakdown into the 99. Now, if I'm selling gold at the range high, let's go back to gold. If I'm selling gold at the range high, I want the dollar to strengthen, okay? All the fundamentals are pointing towards potentially the dollar weakening further. So why would I want to be essentially selling this from a long-term perspective with a view for it to come down to the bottom of the range? I don't think that's a sensible thing to be looking at the moment. Instead, if you want to be short gold, you want to be looking at a short-term sort of range. And you can see here, if I was just to go into this daily time frame and zoom in, you can see we've got a little bit of a range play on the daily time frame. You've got these highs in here around about the 2045 handle. If I was to copy that up and drop that to the lows there, we've got this area here about the 1978. So what I would be expecting from the price of gold, if the US dollar index makes its move up to that 102 level, I would expect the price of gold to be around about this 1978, 1975 handle, okay? If then we get that rejection of the 102 from the dollar index and price starts to fall from there, I'd expect a rejection here on gold as well. That being said, price then may start to rally back to the upside with the potential to break above this key area. Now, obviously, if it breaks above this key area, it's kind of in a little bit of its sort of own world, isn't it? You know, above this area is quite a strong potential impulse for the price of gold. So really being the consolidation US dollar is 3 bottoms show a solid base. You can say that there's potentials for it to be a solid base. I, in my experience, see it as a potential for price to test the significant area amount of times that it becomes a little bit weaker. Okay, that's just from my experience, but obviously as well, taking your own experiences as well. But that's just my opinion. I think price could potentially come back down into this 1975 handle and we reject in this tight little bit of range here. Now, it's going to be a different story if price trades through the 1950, because obviously this has been key area of resistance, key area of support. Okay, so to me, if price was to trade back through that 1950 handle, that's when we can be a little bit more sort of aggressive maybe, or a little bit more certain that the price of gold could start pushing a little bit lower, perhaps back into the $1,800 level. Okay, what I'm basically saying is if you're trying to get aggressive here on your shorts, you need to be a little bit careful. Okay, you don't want to just be aggressive here for no reason and then price starts to spike through your potential stop losses if they are above those swing highs. Okay, now obviously we saw conflict between Russia and Ukraine. In the news outlets, that has started to kind of not be shown as much, basically. I think it's starting to become a little bit of a weird to say a normal thing in the markets, and they've kind of brushed it off slightly. So that I don't think is going to have such a big effect on the market anymore. I think it is going to be more down to what the Federal Reserve do and how they sort of implement their next steps in monetary policy. So we're going to have to see what the Federal Reserve do next and how the market reacts to them pausing interest rates. If they pause, how will price react if they hike again? So with the RBA, for instance, they paused, price started to move a little bit lower, or the Aussie started to get a little bit weaker. They then hiked after, and the dollar strength and the Aussie US dollar strengthened. So we do have to take those kind of things into consideration here for the price of gold. But we are at the range highs. Typically from a range high, you'd be looking for price to come to the range lows. All I wanted to say is just be a little bit careful with any type of opportunities in and around that point. So anyone have any questions so far? Hopefully that made a lot of sense. We've got Madiba from Kenya. Welcome. Let me know if you have any questions. Also, guys, remember as well, there's a possibility to win an ounce of gold. So I'll just go over the terms. You can see we've got the banner down here as well on the stream. So if you want to have a little look at that banner, it goes across and tells you sort of the details here of how you can win or be in a chance to win an ounce of gold. So make sure you're reading that at the bottom. There's some terms and conditions that apply with that. Right, so then how would you trade gold pending orders or in real time? That's a real good question. Depends how aggressive you want to be. Pending orders are always useful if you don't have much time to trade the markets, but then I would say pending orders, I guess you mean limit orders and things like that. Limit orders, I think, only work well if you're trading at a reduced risk, okay? Especially when you're coming into news weeks like we've seen this week. You know, I always talk about when we see heavy news weeks, the prices of sort of your risk assets tend to get a little bit more aggressive in terms of strengthening. So we saw that with the yen this week. Look at the price of gold this week. It's rallied quite aggressively if we look at it from that sort of weekly point of view in here. But I guess if you're looking at the extremes, definitely limit orders do have their benefits. What I would say is if you are going to limit order anything, you should use appropriate risk management and especially use maybe something like an ATR indicator, just so that you've got the average true range over a period of time. That will give you a sensible place to put your stop losses. But again, like I said, limit orders on the other side can be very risky due to the fact that if there's a large news event coming up, then price can easily spike through it before you even know it, you're at your stop loss. So you've got to be a little bit careful with limit orders. I personally always trade in sort of real time. I will alert a level. So let's say that 2075, I'll place an alert at that level. And then I'll look for conditioning patterns around that point, because the way I see the market is that when you see these type of impulsive phases in here, especially on a weekly time frame, on a lower time frame, you'll be looking at the potential for a trend to develop. So if I was to go to sort of the 4-hour time frame, for instance, and just zoom out, you'll see that price starts to create familiar patterns. So first of all, you've got a double bottom pattern. That's probably my favorite pattern to look for, the double bottom, double top. We then break up, we come all the way back down to that neckline, and you can see price is making higher highs and higher lows within that weekly level of sort of an impulsive phase. So that's my favorite sort of way to trade. I would look at the areas of key support and resistance. I'll wait for price to come to those points, and then I'll look for key trading patterns around that area that suggests that price could continue to the upside, for instance. For here, we've bounced off. What I would be looking for personally is another move back to the 2075. If price can break, reject it in here, that would be a better opportunity, I feel, for the price of gold to trade lower. We've got some other questions as well. Thank you for that, Roston. Robin, are you expecting price to reach 2100 at any stage? There could be a potential for that. Like I said, I think if price trades through, if the dollar index especially trades through the 101 handle, then definitely the 2100 could be the next stop for price. Abdullah, if price breaks 2075, where would the next resistance be? That is a very, very good question. On our charts here, we only go back to 2003 at the moment, so I haven't been able to look left here to give you sort of an accurate area, but I'd always look at sort of the whole numbers. So you got that 2100, like Robin said, then you got 2150 after that, 2200 and things like that. That's what I'd be looking at if price was to break through the 2075. Calvin, how are you doing, Calvin? What happened to sell in May and 𝖥𝖣yi? Is it fundies that are supporting gold price so much? It's definitely the fundamentals that are supporting price of gold. Absolutely. Like I said earlier in the stream, there's definitely a sort of risk play going on at the moment. Now, we actually saw the sort of risk off environment, I should say. Now, yen's the usual big risk currency, right? Gold is the risk commodity. And we've kind of seen them diverge in that term because the price of gold has obviously rallied significantly, but the yen weakened really aggressively over these past sort of 2 to 3 weeks. So that's not necessarily unusual, but when you usually see that kind of risk on environment, the price of gold can sort of be affected by that. But I also think, you know, a lot of these prices or a lot of this is to do with where the price is at as well. Price not being at the range high, for instance, would play into a big part of that, because, you know, big institutions need to look for those liquidity areas as well to either add into further positions or, you know, take those positions on the other side of the market. Vincent, what Forex pairs correlate positively and negatively to gold? That is a really good question. I'm actually going to add that question onto my list of ones that we can talk about in the 12 p.m. Webinar, because I think that's a good question to ask. Usually the Aussie US dollar. Okay, Aussie US dollar used to be quite correlated. There is actually a chart that you can find good correlations on. I'll see if I can try and find that a little bit later so you can all see that. But yeah, I used to look at this chart which kind of gave you the accurate sort of correlations between them. Let me see if I can try and find it quickly now. Let me just look at my other screen. Have we got any more questions? My losers when I do not wait for solid extremes. Patience has changed. Oh yeah, you definitely have to have patience when you're trading, and especially the type of trading that most retail traders do is probably more related to the higher time frames than it is to the lower time frames. And a lot of retail traders don't tend to sort of wait to see how price develops. They see a little bit of profit, they bank the profit. It's quite an interesting psychological game trading is, because a lot of retail traders will be willing to hold on to their losing trades, yet when they're in profit, they seem to take the profit quite quickly. I think if you're going to become profitable in this game, it is definitely something to work on, is your mindset and how you can kind of change that mindset to be able to yeah, like I said, come back and be a profitable trader. Let me just see if I can get the correlations up here. If I can't get them up now, I will bring them onto the chart later. Let's just see. Let me see if I can bring this up. We go into full screen mode because this is a good example. So like I said, the Aussie US dollar used to be the one to watch. And let me see if I can get this up. And I've got a really good example of it here. I just need to try and download the image. See if I can bring it up onto the lower screen. So this is one for you, Vincent. So this is the Aussie US dollar and gold prices. Okay, so gold is in the green and the Aussie US dollar is in the blue. Can you see how correlated these used to be? Okay, so you can see the correlation here has kind of gone away, okay, in March, because you've seen the price of gold explode, right? And Aussie US dollar has just kind of gone flatline. But look how correlated it is between sort of October of last year to the end of March. Okay, you can see they're pretty much moving the exact same. Okay, the lines are really, really close together. Even before that, you can see they're fairly correlated. You know, when price of Aussie US dollar traded to the downside, so did the price of gold. when it moved higher, things like that. So Aussie US dollar used to be the one that you could definitely watch as the correlated pair. But when you're looking at correlated currencies with commodities, it's always worth trying to bring up a chart, put them both side to side to see if the correlation is still there. As we can see with Aussie US dollar at the moment and the price of gold, the correlation's not there. Carey, wait for the extreme in dollar Swiss and took a long. Nice. Abdullah, a few days during March and April, both the DXB and gold were bearish together. If this case continues, DS breaks 101, can we expect gold to move down to 1680? Sorry, both gold and Dixie were bullish together. Yeah, that's probably due to some more of other fundamentals that are driving the market at that point. I'd say definitely check around that time where they were both together. Let me see if I can bring that up as well, because that's a good point. You know, just because the dollar is weak doesn't mean that the price of gold is going to rally. It's just how closely correlated are they at the time. So if I was to bring up the let me just edit this. If it will let me. Let's just add another compare. US dollar index. Let's take off. Trying to take off Aussie US dollar prices, but it doesn't want to move. Let's see. I might have to bring this one up a little bit later because we are running over at the moment and we are running back at 12 p.m. So if you do want to come back for that one, I will have that chart ready by then. But that's also a good point to make. You know, sometimes the price of the US dollar doesn't affect the price of gold, but I think that's because something fundamentally is driving the price of gold. But at the moment, just to round up, we're at that 2075 area. We're at the resistance. Price should come a little bit lower. I'm going to be watching the US dollar index very, very closely at this 101 level. At the moment, you can see buyers are coming into the market at the moment, but we are trading within this sort of minor range between that 101 and 102. Thank you for all joining me today, guys. I will be back on at 12 p.m. So if you can join me then as well. I'm also doing one at 7 p.m. Will these sessions be available on YouTube? That should be yes. Hopefully, if it comes on, this is kind of our first sort of testing stream. So we hopefully will see this on YouTube as well. So you can come back to it at some point. But yeah, I'll be on at 12 p.m. and 7 p.m. So if you can join me then, that'd be great. Remember as well, you've got a chance to win an ounce of gold. So please remember to read that banner at the bottom for your chances to do that. So thank you for joining me today. If you can, guys, please like the stream, subscribe to our YouTube channel. That really helps us out. We've got some really cool content coming up really soon as well. So I'd really like you to be able to kind of join me and watch that. So please subscribe to the channel. Like all our socials are all listed down the side there. And yeah, I will speak to you a little bit later. If there's any other questions, the comment section will go on a little bit after the stream ends for about 10 minutes. So I'll be able to just type in to any of your questions as well. So thank you for joining me, guys. I know it's only short and sweet, but yeah, you've got another couple of chances to join. Thanks for all your comments and questions as well. Really appreciate those questions. And I'll make sure that those are noted and that I can talk about them a little bit more in the next session. But the next session is going to be a little bit similar. We're going to break down that gold chart again and point out those key levels. So thank you for joining me and have a great rest of your day. And I will speak to you very, very soon. Cheers, guys.